pullback buy trade here. He had this pullback buy trade here. And then he got short into this pullback sell trade. And he's been able to make money on every one of these trades so far based on the bias shift. And that is how you make money on a consistent basis using those bias shift ideas. Now, as I said, a bias shift is just a Charlie D. Every Charlie D transition is a bias shift. It has to be, because you can't transition from a sell to a buy without going through a bias shift. So when we're looking for the right trade at the right price, on the right context and the right trade area, the bias shift can be a very, very, very powerful tool in your arsenal. Very powerful. So when we see it, we can deal it. But that's the main thing. It has to line up with the rest of the story. If it doesn't line up with the rest of your story, there's absolutely nothing for you in that trade, is there? There's no way you can take it. It doesn't matter what else lines up. There's not enough lining up. So you leave it alone. You just leave the rubbish alone. Let all the crap get taken up by everybody else. And then hit the good stuff. We got another belly sell trade at the same price again there. If anybody was on bonds, sell side off the 124, second time in the last few minutes. It's gone down to 27, so it's not bad. 5 ticks. 5 ticks on the belly trade. So long as the belly flies on the right side, you can take it. So if the belly fly was on the wrong side, you'd probably just leave it alone at that stage. But so long as that belly fly drops back through the 50 line, you should be in pretty good shape. It also detaches one in the, having this fixed opinion basis as opposed to the market structural bias. It does, because you can almost run it without your value lines to get started with. And as I said, as an interns exercise, it's a very good way to start learning about stuff, isn't it? Because you can't be, for example, you can't do the interns exercise unless you're using the bias, because the market has to have that sell side bias before you can sell it, doesn't it? You can't fade a top edge. It's impossible. You can fade a 56 trade. That's possible because that's got a bigger bias attachment to a transition. Because if you haven't seen a bias change, there's no way a 56 candle is going to form, is there? So there has to have been a bias change for a 56 candle to form. So it takes away an awful lot of that ability to do all the wrong trades at the wrong prices. And if it takes away all the ability to do all the wrong trades at the wrong prices, it leaves you with the opportunity to do the right trades at the right prices. So if you're stopped doing the bad trades, it means all you have to do is do the right trades, the good trades. So it's helpful, it's useful. And again, it lines up with things like your dealer boxes. If you're looking at dealer boxes, looking for the right trade at the right price, then of course it allows you to find the right trade at the right price. And and again, you don't have to then look at it from a fade. That's the problem with dealer levels, is a lot of people start using dealer levels to fade into markets, and they make mad mistakes. Because if you fade into a dealer level, where was the transition? I never saw a transition. So why the hell did you fade into that level? Why did you take the fade trade instead of waiting for the transition? I didn't think we needed a transition into a dealer level. What? You need a transition on every single trade you take. You need a transition. If you ain't got a transition, you ain't got anything. So that's the problem, isn't it? That's the current problem. But it solves that problem. It solves that problem because you just sit and wait for the good stuff. And if there isn't any good stuff, you just leave it alone. Just leave it alone. And that's why when at the end of every day that shows up, that's why we've always got green numbers, because we wait for the very good stuff. And we don't care about the shit. We don't care if the market goes without us. We don't care if we miss a move. What we've got to care about is make sure that when the big moves are there and the opportunity is there to take advantage of them, that you take advantage of them. That's the only thing I care about. I don't care about profit and loss. I care about only the loss part. making sure you're taking the right trades with the right structures. And that's the only thing that is important to me. It's the only thing that's important. And remember that we've done this class before about the two traders that were interns. And one of the traders made money and one of the traders lost money, and we sacked the guy that made money. And the guy couldn't understand why he got sacked. He says, but I made money, but I made money. And the other guy lost money and he's getting kept. Yeah, but the other guy that lost money traded properly, which means that there is less chance of him blowing out the trade in the future going forward. So I don't care that he lost money. He took the right trade at the right time at the right price. It's all that is important to me, is that he got the structure right. If you get the structure wrong and you make money, you get lucky. It happens. And if you get the structure right and you lose money, that's unlucky. It happens. But over the long run, if you get the structure right, you'll make money and you won't be risking the bank's money in the process to achieve it. So that's the most important thing.